In this video, I'm going to be explaining market structure on the bigger time frame. So as you can see right here, we're on the weekly time frame. And right here, you can see that the market is trending to the downside. Now, how do I know that the market is trending to the downside? Because we have this high right here, and then we created a lower low, and then we created this lower high right there. And after that, you can see this low right here, lower than the previous low right here. And then after that, we have this high right here, and then drop down this low, and then a high right here, and then a low right here, and then this high right here, and then this low right here. And after that, we still have this high right here, and this low, and this high, and this low. So you can see that so far price has been trending to the downside. So on the weekly, we are bearish. Price is trending to the downside. So right here, price, you can see how price, even though we've been trending to the downside, price expanded higher. Now, we expanding higher, you go to the monthly time frame, you can see the very same thing I just did right now. You can see on the monthly time frame, high, lower low, lower high, lower low. We're trending to the downside. So right here, we failed to create a lower low, and then we failed to create a higher high, creating a lower high again, and then we'll have this low right here, and then we created this lower high, and then we failed to create a lower low, then created a lower high right here, and then created a lower low. So the trend is to the downside. The trend remains to the downside. So that means that the overall market structure is bearish. So this is basically how you can annotate your chart to understand where the trend is going to. Overall, the trend is going to the downside, and we are working with the monthly. And then if we go to the weekly time frame, you can see that the weekly leg, we're still trending down, and every move up right here is a retracement coming into a key level for price to potentially continue lower, because the monthly is showing us that the overall market structure is bearish. So as we are coming up, all we're looking for is potential areas that price could reject off that key level and then continue trending to the downside. Now, if you now use this same analysis, you can do the same thing going to the daily time frame, to the 4-hour time frame. I'm also going to break it down for you. Now, if you're looking at the daily time frame, you can see that the daily time frame right here, the current price action on the daily time frame is right here. This is the current price action on the daily time frame. And what do we see right here? We created a low. Price was previously going to the downside on the daily time frame. You can see that right here. A low, a high, a low, lower high, then this low right here, and this high. Then we'll have this low, and then this high, and then we created a low right here, and then this high right here, and then we created this low right here as well. And after that, what do we see right here? We see a market structure shift. Price rallied above the previous high right here, breaking structure. And after that, we saw a retest, failure to create a lower low, and then created a higher high right here. Break of structure right here, failed to create a lower low, created a higher high, breaking structure. Now, trend on the intraday levels has shifted from bearish to bullish the moment this high got broken. Now, we can potentially be looking for buys to go to the upside. I'm going to explain this in full detail, how you can use this in trading. But in this video, I'm basically just showing you how you can annotate the structural legs from the high to the low. So this is basically the structural legs, the most important structural legs that we are interested in, that will have an impact in the marketplace. You can see right here, we have a low right here, but this is intrastructural legs. So price can break these intrastructural legs and still go up, even though it's looking like a break of structure, but it isn't, because this is the key level that is our low that we're working with. This is the low that created the overall high, and that is the only low. If price takes this low, closes below it, then it means we've broken structure. The same way this high right here, you can see after we took liquidity off this high, we dropped down, failed to create a lower low, then we rallied above it, creating a higher high, which is a break of structure. As we're coming down here is a retest opportunity for you to buy. We go up, we come back down, opportunity for you to buy. We go up, come back down, opportunity for you to buy. We go up, and then we're back down. As long as we don't take this low and close below it, we're still going to be bullish. Price going to reject off anything in this key level and then rally above and create a higher high, because we still have this drawn liquidity being the inefficiency. So I'm going to end this one right here, and in the next video we'll go more in depth.